Mark Selby, Chair and CEO of Canada Nickel, advancing the Crawford Nickel Project and unlocking what we think is going to be one of the world's great nickel districts in and around the city of Timmins in Ontario, Canada.
So you're a nickel company. I was confused. I thought you might be a carbon credit company. What's going on?
Yeah, after today's release, so very, very exciting. It's still lab scale work, but the clear potential of it was, very, very well demonstrated. Typically, these different ultramafic deposits, there's several companies that have been doing work on them, are really focused on the tailings after they've been deposited and looking at ways for those tailings to absorb more carbon over time. We've been working with trying to get the carbon into the entire processing plant as early as possible, because there's various benefits by having some of the rock carbonated. And what we found is literally we take the tailings as they come out of the flotation cells, we juice them with a little carbon for a short period of time. And within 36 hours, those tailings absorb enough carbon that we get to a net zero carbon number. And within 6 days, we're at the point where we're getting over 20 tons of CO2 credits per ton of nickel produced. And so this is, again, hours and days as opposed to the multiple months that we're looking at previously, trying to do it passively in the tailings area.
Okay, let's talk about dollars, okay? Because, people are hearing buzzwords like net zero and ESG and carbon credits and all sorts of greenwashing of the industry, and are getting a little bit suspicious about, especially with the SEC going after a bunch of funds down in New York. We want to know what's real and what's not. So you've talked the net zero game for 18 months? 12 months, 18 months with us. Months, and this is you starting to deliver on that in another more seemingly more meaningful way. So to quote someone, show me the money. How do you make money from this?
Yeah, so in Canada right now, the government has a series of carbon pricing that's going to kick in. So right now it's $50 a ton, and it's on its way by 2030 to $170 Canadian per ton of carbon. So if you take that roughly 21 tons of credits per ton of nickel, and assuming that we got the full value of that credit, you're looking at $3,500 a ton. In terms of, that's $120 million a year average life of mine, and over $3 billion over the life of the project. So again, we're talking, very real numbers. And again, I find all the greenwashing very, very frustrating, because for those projects like ours that can really get to zero, not just kind of knocking a little bit of carbon out of the mix, but because we're in Ontario, because we have access to low carbon electricity, we can design a mine that's relatively low carbon to start with. And then because it's hosted in this rock that has this great property that spontaneously absorbs CO2, which we've now found a way to make it happen much more quickly. We're on the track to be able to unlock those kinds of values.
Okay. I'm going to stick with the money side of things, because there's so many places this can go, because some of the numbers that are indicated in here, in the billions of dollars potentially. I do want to understand how it works. So you originally started this process to try to get your own project into some kind of net zero shape, so you would get credits from the government. But you're now putting yourself in a position where you can actually generate actual cash, like money in. Is that right?
Yeah. So there's two ways to, basically, that will be the carbon price in Canada, and we'll be able to tap into that pricing, with the appropriate market mechanisms that, get set up by that point in time. The key piece for us is, we need a concentrated source of CO2. One of the challenges with the passive tailings approach is there's only 400 parts per million CO2 in the air, so you don't have a lot of CO2 around. So using a higher strength source of CO2 into the process. And so, that may come from our downstream production. We could look to produce hydrogen by cracking methane, and you end up with a carbon stream that's there. There's a whole series of different types of industries that obviously generate a high CO2 stream. So, one of the things we're going to be talking about with the governments here is really, the fact that we've got Crawford, but we also have the other 42 square kilometers worth of ultramafic rocks to go after. That we should really start looking at Timmins, the Timmins area, as a real zero carbon industrial cluster, where you could use the carbon capture potential of our rocks, with the low carbon electricity that's available in this area, to really sort of, basically transform the economy of this area.
Right, but I want to try to work out what's synthetic. You're kind of creating a situation within the rules of the current legal framework that it kind of sits in. Yeah. Sorry, it's not even legal yet, is it? It's not quite there yet, but assuming it gets there. And what is it actually doing naturally, and the natural good that it does? Like you're saying, there's only 4 parts per billion.
400 parts per million.
400 parts, right? Okay, so right, so that feels to me slightly more real than cracking hydrogen and doing whatever you're suggesting over here. So how do you play this so that it kind of sits ethically within this carbon credit market?
Yeah, the key thing here is in terms of our downstream. The most likely thing would be just taking our downstream production and taking the off gases as that gets converted and bringing that back. So not only can we be sort of class 1 and class 2 carbon neutral, but get all the way to where we're in terms of a class 3 carbon neutrality. So that to me is very, very, very exciting in an industry that has, again, nickel has a huge problem with the massive carbon footprint that all that production in Indonesia has today. So that this is something that the auto industry and generally most consumers today are pretty hungry for in the nickel space.
Right. So give me what class 1, 2, and 3. What are they?
Yeah, the different categories of carbon. So there's the carbon that's generated by your operation directly. There's the carbon that's generated from the electricity sources that you use to feed your operation, and then the final category is the carbon that gets generated by the people who use that product in the next stage of transformation. So most people are just focused on getting to zero on those first 2 levels, but the fact that we think this process and our rocks give us the ability to be able to look at being carbon neutral at all 3 levels.
Right, and so given this is basically you saying taking advantage of the ultramafic rocks that you've got, other companies will be able to do the same thing, presumably, if they want to, of a similar ore body in nature. What's the process for you? What does it mean for you today? I mean, we understand the mining process? You go through study phases, and at the other end, hopefully comes a report which says these are the economics. You get finance, and off you go. With something like this, how do you go about factoring that into the mining component of what you're doing? Does it run alongside? Does it run separately? Are you the guys to do that? Will you bring someone else in? How does it work?
Yeah, no, in terms of that's one of the things that's very exciting about this process is basically, using sort of existing types of industrial processes that you would see in a mill. You would basically just add some additional equipment. And the thing we're going to be working on are ways, we think there's a lot of potential to take that 36-hour zero mark and move it up even faster with different levers that we're obviously going to be working on over the next few months. But literally within the mill facility, you would just take those tailings and do a few extra steps to those tailings as they make their way to the final tailings facility.
Right. Okay. And you're sort of indicating that this is sort of like 10 times faster than previous passive tailing approach. But does that matter given the lifetime that you're going to be doing this over, in terms that you talked about having a very large asset, multi-generational, hundreds of millions of tons of rock we're talking about. Does that matter, or is it more about how much it captures?
No, it really is both fast and the total amount, because the fast part, if it happens quickly enough that you can actually, again, sort of build it into the mill processes, that way it's very easy, very measurable, very bankable, types of carbon credits. Again, you can still get there with a passive approach, but again, it makes it very, very a robust approach. If you can inject CO, you measure, in the mill, you measure the carbon, you do the CO2 injection, you do some additional steps, and you measure the carbon, that comes out of the pipe before it heads off to the tailing, and you can do that. Those are the kind of carbon credits, not planting trees or not taking trees down or not cooking pots in Africa. These are real, very measurable carbon credits that are going to be very valuable going forward.
Right. Okay. Well, let's talk about that, because there's a kind of big, kind of confusing market, and there's a very nascent industry, and lots of people doing lots of different things out there. The retail are going to be confused, but so is industry, quite frankly, because there's going to be different, I guess, grades and different people selling different solutions, some of which are going to be a little bit more realistic and honest than others. So where does yours sit in the mix?
Yeah, again, with this, effectively, in process tailings carbonation, we really think that, it should be in the absolute highest rank of carbon credits. As I said, you've got to start, you've got an in-process carbon measurement at the start. You do some activities, you have a carbon measurement at the end, and you can very demonstrably, measure the carbon that's been soaked up during that process.
Right, but how do you help the companies who want to buy carbon credits say, this is the one, have I got a deal for you? Because you looks like we're talking some big numbers over, long periods of time. And I'm just trying to work out the bit how you make money. Not how do you save your company money by getting tax credits for your own operation, but how do you then sell these things? Because you're miners, you're not carbon credit guys. So how does that work?
Yeah, no, I mean, again, as the market evolves, just like you see streaming of various metal productions, you're going to see streaming of carbon credits, which again, I have a dream that, we'll be able to finance a big portion of the equity of this project, from a carbon credit stream sale in a few years when we get to the project financing piece. So there will be a number of buyers and a number of ways to monetize those particular carbon credit streams. But the key fundamental, and again, what's great about this process is, again, having a very auditable, measurable, amount of carbon capture that goes on. And so, the thing that we'll have to do is, because we need a concentrated stream of CO2 to be able to make this process work, we'll obviously be sharing that value with whomever provides that source of carbon. But again, given that it's a waste product for most companies, and we'll be able to, it will be a pretty valuable. Our plant will be a very valuable commodity to be able to take that CO2 and permanently sequester it.
It's kind of interesting. I just want to, it's hard to work out whether that's a buyer or a seller's market. I guess that will flip depending on where we are in the cycle at some point in the future. But so just on just in terms of the I want to come back to the sale. I'm trying to work out a number, right? So you've got a study coming out at the end of this year, but you've got a PEA in place already. So based on the PEA numbers, what are you talking about being able to produce potentially? Because that's going to help us work out a potential number on this thing.
Yeah. So if you come back to the Canadian carbon price of $170 a ton and 21 tons of credits per ton of nickel on average, that's $3,500 a ton per ton of nickel, or over about $1.60 a pound. And that, based on our life of mine production average, that's $120 million annually and $3 billion in terms of total revenue. Again, being able to capture the carbon isn't going to be free. So, there will be some additional capital and operating costs that we'll work through and figure out what that looks like. And again, depending on where the source of CO2 comes from, we may have to share some of that value with the company that provides that CO2 to us.
Right, but you put out a release in the last few weeks with regards to the resource update. So every time you increase the resource, does that have a positive impact on the carbon credits component, presumably? Oh,
for sure. Yeah. So, if you look at our PEA, we had roughly 900 million tons of material in a mine plan. What our target for the feasibility study is, we've been talking about having 1.3 to 1.8 billion tons, so 50 to 100% more. Yeah, so every one of those tons of ore and 50 to 100% more nickel is going to end up with 50 to 100% more carbon credits on top of those numbers that I just quoted.
Right.
So
okay.
It's very, very sizable numbers.
Okay, so you weren't kidding here with the dollar. This is why I'm always interested in the dollar number. That you've got to work out what the cost of sale component is, presumably not that expensive, but the kind of increased capex component, what that looks like. But if you're talking about 120 million bucks annually for the next life of mine, $3 billion ish, give or take, over the life of mine, that's a big chunk of change. So I was sort of joking about this being a nickel company, or rather carbon credit company with a nickel byproduct, but not really based on those numbers.
Yeah, no, it's getting to be, we won't be all the way there, but no, I mean, carbon credits are going to be a very, very, very big, byproduct value for this operation. And then there's a whole other chunk of value that we haven't even talked about is, again, being able to have a zero carbon product in the market. Those products for a good period of time will be attracting fairly sizable premiums, particularly in a metal like nickel, where you have a huge amount of the global nickel supply comes with a massive carbon footprint associated with it. So that's another chunk of value on top of what we just talked about. And again, the thing that people I don't think pay enough attention to is the fact that we think we've got another 20 targets in the Timmins area, right? We have 40 times the footprint for that we've got for the 2 billion tons of resource that we just announced with Crawford. We've got 40 times that footprint of material that we're going to be spending time drilling over the next few years to unlock that potential as well. So we really do think that Timmins is going to be a big nickel district, and again, we think there's this real opportunity as one of the few places in the world where you have the intersection of low carbon electricity, infrastructure, and a sizable industrial population to start with, and then a whole pile of ultramafic rocks sitting in and around this region that can capture vast amounts of carbon.
Do you think this changes the language between OEMs and mining operations? Because mining's always been sort of seen very dirty, very kind of hit and miss, and perhaps something you don't necessarily want to be associated with. Does something like this change the type of conversation companies like you, because there will be others with similar host rocks, that allows the automotive company, gives permission for the automotive company to think about it a different way, because they do need to. We've talked about it multiple times on the energy show. On the battery show, which is the fact that people are trying to nail down their 2025, their 2030 supply chain, and it's getting these are tighter markets. There's not a lot of big projects out there. And hundreds of billions of dollars being spent by the automotive companies to remove ICE engines from the system. And I'm just intrigued because I think Tesla's talked that game. You've got a couple of the Japanese guys, the Chinese guys talking that game. Is your expectation perhaps to have a different sort of conversation going forward?
No, 100%. One of the things we talk about with the mining industry, and again with the whole EV chain, no one gets too upset and fights an auto plant being built in their backyard. No one seems too upset if someone's going to build a precursor plant, in their city. But again, mining in so many parts of the world, is seen as a real negative activity. And so, when you can flip the dialogue to become the mining partner of choice, which again, with our community, First Nations relationships, with the way we've engaged, in the Timmins area, and then again with this, ability, to really have a meaningful impact on carbon, hopefully we can, start that to flip that over, and again, not only just for Crawford, but again, this type of nickel deposit, these ultramafic nickel deposits, FBX, Giga, a bunch of the other ones in British Columbia. I really believe that these deposits, given their ability to produce a zero carbon nickel product, are going to be the nickel deposits that drive the next 100 years. Sudbury and a few big sulfides took us for the first 100 years. The big laterite deposits in Indonesia got us through the last 20 years in terms of providing nickel for all the stainless steel that China and the rest of Asia has been demanding. And I think this next generation is really going to be centered on these ultramafic nickel deposits, and their ability to have the potential to produce a zero carbon product.
Right. Okay. So coming back to the numbers, you've had debates with me. You've had debates in the industry for a long time around, well, these low grade projects just don't work. And you've explained it. You've converted some people. You'll never convert others. They want their high grade nickel, and you can argue the case, well, there's not much of it. And it's also quite expensive to get at. So net, we're in the same place. You can argue that if you like, but you're never going to persuade anyone. Does the fact that generating a carbon credit of $1.60-ish help that argument somewhat, or does it negate that argument somewhat? Or quite frankly, how do you now look at nickel pricing in the market? Do you say, well, actually, tell you what, in a very meaningful way, this puts us as a bottom quartile, bottom decile cost producer now. So there we go.
Oh, yeah. I mean, if you can knock $1.50 or any portion of $1.50 a pound off your cost, and then you're going to earn a premium as well, that's some serious incremental margin that we're talking about, for those particular projects. And remember, right now, carbon capture, some of the work that's being done, CarbFix in Iceland is one of the leaders in the space, and they're working with Climeworks, who's basically taking CO2 at 400 parts per million, concentrating it into a high strength CO2. And CarbFix basically has drilled holes deep into the underneath Iceland, and is pumping this material in there under pressure and temperature to be able to get that reaction to happen. The fact that all we're doing is taking a tailing stream that's been already ground up into very fine particles, and taking advantage of that has a massive amount of surface area, and then injecting some CO2 in at the right point in time, and then doing a few steps. That's a much simpler, cheaper process, and takes advantage of a pile of work that's already being done on a material, right? So, it's just an inherently good thing to do.
Right. So you're reducing the cost at one end, charging a premium at the other, and whatever the nickel market does, does it give you scope for allowing bigger fluctuations in the price should that happen? I know the general thesis is that it's up, but the last few weeks suggest that it's still going to be a little bit a volatile trip on the way up there. Does that sort of change the types of conversations around funding as well that you may have? I know you've got a chunk of money in the cash in the bank at the moment, but at some point you're going to need either a strategic to come on board, or you say, well, actually, maybe this allows us a different sort of conversation with the institutional funds, the banks, etc., and we can delay the need for bringing a strategic on board. So in terms of optionality, I guess I'm trying to understand what your thinking is.
Yeah. So, for us, and again, given the volume of carbon credits that we are looking now to be able to generate, that should be an attractive opportunity for anybody in the carbon space who's actually really serious. When you look at some of the companies that have got created and their carbon streaming and their carbon offset programs or whatever, they get in some pretty nebulous territory. And so the fact that these types of credits are going to be available from this type of deposit, and there's our multiple, we've got multiple deposits in the areas, and there's multiple opportunities. Again, if you're a private equity company that's looking for ways to deploy capital into new ideas in the carbon space, I have to believe that we should be getting some real interest from entirely different groups that we haven't talked to before. So we'll see what happens in the next few weeks here.
Okay. Well, like say, you've got a bit of work to do. This is still lab scale, right? So you've got to kind of go through the phase. So what are those phases? What is the timeline? And presumably it's not sucking up too much of your cash.
No. These. I mean, again, the great thing is, these are tailings that we're producing already as we do the metallurgy work. So, and they're relatively simple experiments, so we don't have to go through a lot of complicated capital and operating costs to get there. So we think there's a number of enhancements to be able to make this happen even faster. And so we'll be testing those over the next several months. Based on the results of those tests, we'll start to actually operationalize what that carbon stream could look like. So there may be 3 or 4 different types of carbon streams that could become available from an industrial partner, and then start to design the plant to be able to drop that in. I don't know if it'll make it into the base case feasibility study, but in the technical reports there's chapter 24 where you have an ability to talk about additional opportunities, and that's something we'll be aiming for, to be able to have a discussion about when the feasibility study comes out at the end of the year.
Right. Okay. So feasibility study is the big one, because it's about the nickel, and just want this last question, if you can deal with this for me, okay? Which is, you've got obviously the market's being a very erratic for everyone at the moment. Everyone's going to come off. Nickel price has come off. Copper's come off. Gold's, everything's come off. Right. People are very nervous at the moment, but industry isn't. They are moving forward. They are spending the money. They are building plants. They are getting supply chains in place. They work in longer term cycles than perhaps us retail guys would. They are confident about what's coming down the line, and presumably, like all cycles, that this one, this one will come out the other side, and then markets start moving again. But how real is the carbon credit component as part of your story going forward? It's not, because here's the thing that people say to us: it's just a kind of gimmick. It's just a marketing gimmick for now. The markets are quiet, something to talk about. Are they right, or is this genuinely an integral part of your business model going forward?
It's an integral part of our business model going forward. From early on, we went out and trademarked net zero nickel, cobalt, iron, because we realized early on Crawford is going to be a real project. And given these ultramafic nickel deposits in a place like Ontario, where you can design a mine to be relatively low carbon to start and have the rocks that soak up whatever additional carbon is required to get to zero, it has been a focus from day one. And again, the great thing about this in-process carbonation is, again, the same kind of steps that you do to do your flotation, that you do in flotation in your mill to be able to liberate the nickel, are the kind of steps that you would do to be able to inject the carbon. And so, we think it's very, again, even though it's lab scale, we think it's, it should be readily be able to be scaled up to an industrial process and without breaking the bank, getting there. So, we're very, very, again, early days, but very, very, very excited about the potential of this.
And there's a market for it. You're going to sell this. Who's buying this? Go on. Who's got the money? Why are they buying it? And why are you confident that it's a sustainable part of the industry?
So again, one of the leading commodity analyst houses is Macquarie. Last LME week, they went through the exercise to figure out, okay, once the European Union starts putting carbon taxes in place on materials that come that are imported into the European Union, which is coming by the middle part of this decade, they did the exercise to calculate, okay, what are those premiums going to look like? And for nickel, it was $2,000 a ton premium. And again, they didn't go through that exercise just because it's an academic exercise. People who are in the market know carbon taxes, carbon prices are coming. And when that comes in a few years, you are going to start to see real premiums emerge for low carbon, zero carbon products. And again, the European Union has a tradable carbon credit, and you can see what those prices are. And you see, you can see where those prices have been in the last few years. And again, it's real dollars that are on the table.